Hello everyone, welcome back to my channel Stock with Khan, and in today's video I'm going to be talking about some of the best dividend stocks to buy now and that are sitting at a very attractive price. So I will highly consider doing my own research, but at the same time listen to me if I would be in your shoes, because I put a lot of time into these stocks and studying them in detail, and knowing the current market being totally red, diversifying your portfolio and putting some of this money that you have into those stocks to get consistent quarterly return or annual return on your money. So let's get right into it. The first stock that I'm going to talk about is Apple. Apple is a company with extremely huge fundamentals. It has one of the biggest market cap out there in among the technological companies. Its market cap is 2.05 trillion. So it's a company which will give you quarterly return on your investment, but it will also give you the solidarity, the trust that in worst cases the stock won't go that much down that you will lose all your money. So we will directly go into the tip rank to see what is the upside potential in Apple on the longer run, and then we will see and look at the dividend rate of Apple. So if you can have a look here, it says Apple has 23% upside potential. Remember, this is a tip rank that is not a premium version. A premium version will probably tell you that it is at this point either 151 or 149. So it's more or less $1 up or low. In other words, the analysts are indicating at Apple price at this rate as a very strong buy. You can see that RBC Capital is considering it as a buy and is giving it an upside potential of literally 39 to 40% from this point onward, targeting it in the next 12 months to reach $171. The same is with Jefferies, Needham. All of them are targeting it to reach in the next 12 months to almost $170, indicating that Apple at this price, being a dividend stock, is a very attractive stock. It has the growth potential. It will give you a return on your stock, as well as you will get a quarterly return as a dividend on your stock as well. So in both cases you are not losing anything. Instead, you are getting an annual, quarterly, as well as a return on your stock price. You should always do your own research. It's just my own opinion, my own research, and I'm sharing my own ideas with you. The next stock that I want to talk about is AT&T. I have brought this stock before as well. AT&T is one of the stock. By the way, let's go back to Apple for a second, because I wanted to tell you how much dividend Apple is giving. So the annual dividend, the dividend that Apple is giving at this point is 0.82 cents, that is 0.66%. So remember, the higher the value the stocks obtain, the lower the dividend yield is. The lower the value of the stock goes, the higher the dividend. So in either case, you are getting paid based on the fluctuation in the stock. The customer or the retail investor doesn't lose as much as the company. So that's the beauty of the dividend stocks. The next stock I want to talk about is AT&T. It's a telecommunication technology company. AT&T is one of the highly addressed stock in terms of dividend yield in the YouTube community. The reason behind that is you can see it's giving 6.99, almost 7% of dividend, quarterly dividend, indirectly indicating to you that if you would be, let's say, in $100 invested in AT&T, every 3 months you will be getting $21 for your investment, no matter what the happens to the market. more or less the stock price of AT&T and stocks similar to AT&T remained stable. And I will show this to you. You can see it is the 6 months chart. 6 months in October 7, it was sitting at 28.80. So right now it's sitting at 30 and beyond, indicating that there was slight growth as well as you are getting this consistent return on your stocks. That is the beauty of those dividend stocks, and that is the reason I am so bullish on those dividend stocks, because some of them have also growth opportunities, but at the same time you are not just leaving your money sitting in a cash form, but your money is making babies for you. It is giving you a return on your own investment, while you are at the same time not losing but rather also gaining value on your stock price as well in some of the cases, just like I indicated with the Apple price. The next stock I wanted to talk about is Capital Southwest Corporation. It's an American company. Exactly. So this is one of the company which has at the moment very good, even better dividend yield, 7.73 than AT&T, and for sure than Apple. The stock price at this point is 21.80. If we come to tip rank, it will, the analyst point of view, more or less will be the same. So it will indicate to you that from this point onward, you, in the next 12 months, you are not, you can see this, the analysts are rating it as a strong buy, and it's the next, in the next 12 months, the potential that this stock has is it's not going to go down. So the maximum potential downward potential from the current price, which is 21.80, it has 20. So in 12 months, if this is going even to $20, if you are getting 7 to 8% annual return, this will increase. So right now it's 7 point something, this will go to 8, and your money won't be lost, as stock value won't be lost, 21 to 20. So basically you are just getting a return on your money for just investing in dividend attractive stocks like Capital Southwest. The next stock that I wanted to talk about is Lumen Technologies. Lumen Technologies is also giving away very attractive dividend yield. In fact, it is one of the best in this. It's exactly just like AT&T, 6.96 quarterly dividend yield. This stock also has at the same time a growth potential, so it's 13.36. But if you look at 52 weeks range, it was not long back trading at 16.60. So if we look at tip rank, then we will have a better idea where exactly in 12 months. Okay, so in 12 months they're also rating it as $12. So from 13 they're rating it that it in the worst case will go to $1 down. So it's for sure a hold. But if you calculate it, let's say right now you invest $250 in this stock. That is buying 20 stocks from it, and you are getting 6-7% based on your investment, indicating that you are going to be getting somewhere $17 to $18 every 3 months, and that is literally $55 to $60 in a year. And in the worst case, if it goes down, that is 250 you invested, in 20 stocks you invested, you are losing 20. So for the longer run, if you have a lot of, like at this point, if you have a lot of cash in your hand and you want to diversify, of course you should buy value stocks, growth stocks, dividend stocks, penny stocks. The more diversified you are, the more secure you are, but you should always do your own research based on the fundamentals of the company. The better PE, EPS, all these ratios you should keep in consideration, and then you should do your investment. But I'm telling you based on the fundamentals that I have studied for those dividend companies. And if I would have right now considering to buy this stock, I will for sure buy minimum 50 shares from this stock. So almost putting somewhere between $650 to $750 in it. and then I would just leave it for 10 years so that I have consistent quarterly to annual return on my money. And this is going to give me occasionally those coffee, going out for a coffee, or occasional pizza from a restaurant, and all these sorts of the many expenses that you have, it will cover for you when you have investment in stocks like that. So these were my 4 stocks for you from the dividends perspective. Please do your own research, but if you found this video of value, please do yourself a favor, stick with us, hit the subscribe button as well as the notification bell, and I will see you in the next video.